All right, what's up, traders? It's your cult leader once again, back with another hate video. Just kidding. I'm going to try to make these videos a little bit more educational and improving of the other trader strategies, and see if I can refine things just in my own points of view, because then we can actually kind of work together and create a little bit of nicer community. I know there's a lot of crazy backlash around different Forex communities, different Forex traders, and it might just be better to try to work together and see what we can actually do as a team. So today we're going to be reviewing the Swag Academy. With a name like Swag Academy, I think it's freaking hilarious. So we're definitely going to have to watch this guy. I guarantee he's got a crazy funky attitude. I haven't watched any of his stuff yet, but I can tell you he's got the best dang thumbnails I have ever seen. I mean, guys, look at this. Look at those thumbnails. Oh my God. Holy crap. Oh my God, look at this one too. Damn, is that him? Holy shit. All right, we're going to jump into this one right here. Let's look at it. All right, guys, so this is a brand new strategy by him. Hopefully we can refine it, make it a little bit better. For all we know, this could be really, really good, but so far I haven't seen any strategies on these major Forex YouTubers that have really sparked my interest, but let's see what we can do.
Gang, welcome back to
Oh
the
my
channel.
God, damn.
Swag AC vlog, current status. Welcome back to the Swag Academy. And it's a very, very good day, because I looked at my YouTube metrics and analytics, and I'm almost near 50,000 subscribers. And that's a very, very big deal, because a lot of y'all who are with me and watching me now were with me when I only had 200 subscribers and 1,000 subscribers, and when I posted my videos I would only get like 300, 400 views, and now I'm getting 100,000 views and
it's a great feeling
views on all of my trading videos. So it means a lot that you guys have stuck with me this long. In other news, Secure the Swag episode 1 dropped last week, and you guys have had a great reaction to it. You guys loved seeing my life up close and personal, seeing how it is, having, money, and then coming from a place where I had no money, then having a wife, and then having a dog, and then and that's what you're gonna get.
I want to see the strategy, man.
All the ups and
Let's
downs
go.
as well.
All right, guys, I had to skip forward. That's like 7 minutes of talking. I know for just a YouTube, like, new viewer type of thing, new viewers, they generally don't care about this stuff, but I know a lot of current viewers, current subscribers, they might actually really like watching this stuff. Personally, I like to keep the intros very short, but anyways.
To actually measure and compare my strategy and how to apply a scalping strategy to it. So my strategy, as everybody knows, is I'm an intraday / swing trader. I trade from level to level. So that means I have my key level set, and that means obviously when price gets to that exact level, then I analyze. So for example, if price on GA was to actually, let's say it reverses right now, right? My strategy is, first thing you do is see what it does at a key level. That's the first thing. See where it's at. If it's near a key level, manually watch it. The second strategy is wait for some type of, let's say if it's going up, wait for some type of bullish, confirmation, whether it's a hammer, a morning star, inverted head and shoulders, anything that confirms that it's going up. So let's say we get this bullish engulfing right here. If we see a bullish engulfing and price goes above the moving averages on a 1 hour or 2 hour, even a 4 hour, then I'm scaling down to a 15-minute time frame and seeing if I can find a break of structure, which is obviously this higher low right here. So if I saw this higher low right here after seeing the bullish engulfing confirmation and it's on a key level, I am entering with a stop loss right below here. Tight stop loss. I'm entering to at least the
I got to add something here. He seems to actually be using very similar to... So I got to add something here real quick. He seems, at first glance, he might be trading a very similar way that I actually trade. And I'm drawing these key highs and lows and supply and demand levels, and then waiting for the reaction off of them. And something that he's actually not pointed out here is that the the candle has actually swept below the previous lows, and this is actually a very strong indication that there's going to be a reversal there. Because why is that happening? We want to always know the logic behind things, right? We don't want to just say, okay, we're looking at the level for a reaction. We need to know what's actually happening at that level. And when we see those sweep below and it bounce up really quickly, that's basically people getting stopped out of their positions, and these major big traders are filling their positions. So that's actually going to be a very strong indication that the trend is going to reverse. So if we look here, you can kind of see how it's gone below that level and then really rallied out of it and then broken the levels that brought us down to those lows. So now simply we're coming back to that original zone, and he is talking about how it's bouncing off of there, and what that's doing is giving us a second opportunity to enter for all the traders that got left behind in that bounce. So naturally, this is when we would want to be entering. Maybe I'm just explaining it a little bit differently. Maybe I'm explaining it a little bit better.
To this next level up here, but mainly up here, and this is where I'm going to take, partial profits. If I'm in the trade, obviously for 250 pips, you want to leave it, take some money out of that, you know what I mean? Because chances are it could go to the midway level and then head back down. That is my strategy. I can show you strategy on, other pairs as well. AU, like I said, I keep to the same pairs. AU, gold and GA. The strategy over here, which I explained several times, was, I had this breakout, this consolidation range. It broke above the moving averages. So the first thing I did, like in order, I saw what it did at the key levels, right? Saw that it was consolidating. Went down to about 2 or 1 hour time frame. Saw that price created a higher low right here. This is a higher low because this low is higher than that low. So I already see the break of structure within the box. So I'm scaling down to a 15-minute time frame. Way down here, way down here. Nothing but higher lows. That's why we have this, this is not a trend line. This is more of a leg. So like I have it drawn through price because it's a leg, not a trend line. We can see.
Okay, so I want to add just another way to view this is now that he's on that lower time frame. On the higher time frame, we saw that higher low being formed, but on the lower time frame, we're actually seeing a higher high also being formed. So what we're seeing is that the level that brought us down to low right here, if you see on the far left, we're actually closing above it in this move here, right? So that's the major thing that's important, not necessarily the higher low, because what can a higher low always be? It can just simply be a retracement, and then we can move for another lower low. The very strong indication that the important side is that we're actually breaking the level that are bringing us to that low. So this is the momentum move, and then that momentum move is then eaten back up quite quickly, and that's also denoted by a higher low as well. That just naturally comes hand in hand. So that's probably more likely what you should be looking for. And then we see the retrace back to these untested levels, and that's the entry point that we would look for.
See, as prices are making higher lows, it goes above this box and it starts, trending and actually making higher highs and higher lows. I'm entering amidst this break and obviously a retest, but I'm entering. You could have entered, here, obviously when prices are making low, higher high, higher low, higher high, higher low, higher high. You could have entered any one of these higher lows, especially when it broke the box for sure. And then when price wants to, obviously get right here and clear as day, make another higher low, enter. Like you use the 15 and 5 minute to enter. That is.
Yeah, so he seems to just be a little bit slower entering. He waits a little bit longer for the trend to really be present, and I'm very picky with how I like to enter my positions here, because this is what's determining my trend change, that move above this level, and then we enter on that retrace. And he's talking about here again, that pullback and then continuation into that trend. And that's basically, you see if I draw it very cleanly here, hopefully, that line there, that's the level that brought us down to that wick low, and then we breaking back into that trend. So that's what he's talking about when he's actually saying that we're breaking above the high there again.
The strategy, and like I said, I ride it to my next level. I use Fibonacci. I use everything in my toolbook to make sure I make the most money I can possibly make. Obviously, it doesn't get to the next level. It manually stops right here. Once I see price getting here, there's two things you could do. This is, like I said, it's a leg. You can either see when price is stopping and does the same thing over here. So just looking at it, from a structure background and structure point of view. When I see price break below this low, I know it's going to retest the mid level. But if you want to take a little bit of
Yeah.
profit out now and take partial profit, you can, as opposed to waiting for it to like diminish some of your profits. You know it's going to come to the mid level. It's not going to break structure, which is obviously you have all these higher highs and higher lows. It's not going to break the last higher low it made and then go back up. Nope, break a structure. It's going to come down and retest this mid level. Look at the long term point of view of it. We can obviously exit right here, and then obviously once the price is over here, back to the 4-hour, we know to re-enter. Obviously, you could have entered here amidst this consolidation. Back to color so you guys can see it better. I'm trying to get you guys to understand black charts, but just so you guys can see it better, I entered here. But the difference between this entry and this entry off the box, this is where candlesticks come into play. That candlestick story video where it's like this candlestick is full, barely any wick, full momentum, like heading straight up. Mirabozu, it is breaking, going all the way back, going all the way up. This is wicks, like a bunch of wicks, wick down, wick up.
Okay, what he's talking about here, it's not my preference, but some people do like to trade kind of this way. When you're talking in terms of ways that you're going to be viewing something as a user, it can be very not absolute in this sense, where he's saying, okay, it's a full body, right? Or it's got big wicks or something like that. And that's very up to the user judgment. Not my preference, but it is valid. Wicking around does show weakness. The bodies do show strength, and that's just the fact. But the problem is, if you're leaving things up to the user judgment, then it's very easy to get emotional, and then you can trick yourself into making trades that you shouldn't actually be trading. Hopefully that makes sense for you guys.
As it's breaking the box, there's no indication that it's going to be, pushed all the way up, because as it broke out of it, another consolidation right here, and it came back down. So you got to be mindful. This is why it's like a lot of people aren't, it's like this is why they lose so much and they're like unsuccessful in trading, because they're just looking at a level, or they're just looking at support and resistance or a moving average. You got to look at everything. They're not looking at fundamental announcements. Like, look at everything. And look at the candlesticks. Like, you may think this is a break of the box, and technically it is, but guess what? This is not a powerful exit. We are entering off of like full confirmation. This doesn't give me any confirmation. Doesn't give me any.
Okay, I will say one thing here, right? Also, it doesn't matter, in my opinion, how the wick is, unless it's actually closed back within. In this case, I still would define that as a breakout from this level that brought us to low, and you can see that it still actually does rally for a little bit, and then it gets rejected off of this previous resistance area, right? So that's the reason it got rejected off, but it's still showing the power of the breakout. And as long as the wick, in my opinion, closes, or less the body actually closes above, I still think that there's power to that move and there's still potential. In this case, it just decided to go and it stopped people out a little bit one last time before going for that major move, and that's just the way things work when you're trading with such tight stop losses like I particularly trade. I don't know how he's placing his stops, because he actually hasn't talked about that yet, and he's kind of talking in terms that are quite vague, but I do understand how he's talking, and he is using institutional trading methods just based off of the way he's talking. He's just not being super specific, which is the problem with that I have so far.
Momentum or hope that it's going to shoot all the way back up. So as price is doing this, even this candle with this wick, no hope. Now this, on the other hand, hope, because it's full momentum. Comes down. Like I said, this isn't a trend line. It's another leg as well. The second leg. But look at this. A hammer going above. Not much momentum. The candlestick, full momentum. Entry could have been there as well. Stop loss right below here, this low, or even this lower over here. Take profit up here, it goes right there. And even if you scale it back, Fibonacci as well. Like, look at every single tool book you have.
Okay. He says look at every single tool book you have. I actually completely disagree with that. I think you should focus on only one thing. This is my strong belief. And then you won't have these conflicting views. You guys know it. You've put up multiple indicators at one time. When you're learning, when you're very new, you're trying to analyze everything, and then your mind gets very clouded with different opinions. I think that's a very bad way to trade, unless you've been doing things for a very long time and you can actually know the data for every different tool in your book. But I think when you're first kind of starting out, you can be profitable by only looking at price action, maybe throwing a Fibonacci, just very simple. Don't focus on everything, because then you're not going to master anything. You're just going to be lost.
Up here, C right here, where does it go? Right to D, drag it over. See, 0 right here, A, B, C, D, clear as day. Now we have it over here as well. A, B, wrong way. A, B, C, and now D obviously matches up with our second leg when we had it on.
What he's doing right now, I'm not actually sure what he's doing. He hasn't really explained it, and I actually don't really know what it is. A, B, C, D, and Fibonacci. This I don't actually know what that is. So hopefully you guys know what he's talking about. Maybe there's a previous video he's referenced, but that's just, I don't know.
On this one actually, this no structure, that's basic form. Click this. I'm trying to get the actual. Thank you. Clone. Perfect. Same leg. Matches up right with the 27. If I drag it over straight through, drag it straight through. Don't drag it, just above price. Drag it straight through price. Obviously, matches up with the 27 extension. So
again, I don't know what this means.
You know what price wants to do. But now we're at a key level right now. So don't just automatically assume price is gonna head up there. See what it does at this key level. It can obviously reverse at this key level if it wants to, and retest this little mid-level 2-hour support, resistance. Well, support now because it's above it, or test this 2-hour support and then head up, or you can just break right through. Just be mindful, if it breaks through, it's going to that 27 extension. If it doesn't, we can see price. If we obviously delete this and delete this, we can see price either coming here or even coming right here. So just understand structure and pay attention to what it does. But that is my strategy. This is why, like, even with AU earlier, I told you guys exactly what it was doing in I think the scalping 1, 2, and 3 video. Price was right here. I said it was gonna go down here. When it came right here, what does it give you? It gives you not only a morning star, this doji, and then it pushes right up. You know what I mean? Confirmation. It goes right up. Like this is so like easy and clockwork when you understand the pair you're trading and you're focused on mastering one pair as opposed to trading, different pairs and doing a million different things. You know what I mean? You're focusing on one pair. So that's the real strategy. As far as a scalping strategy, you still got to understand what the market wants to do. So my scalping strategy is not just going left, right, up, down. It's more so I know price is retracing off of here, right? So I'm gonna go down to a 15-minute time frame, or even go back to a 4-hour. Just open up a second chart actually. 280 USD here, 15-minute time frame, way down here. And then all scalpers do, like I said, they get in and they get out any indication when they see red or like, they're just in and outers. And like I said, I don't scalp as much, but for those who want to scalp, go with the trend. So we're not selling it anyway. Like if the trend is up, we are looking for buys. So you can get in from here to about here. This is a 30 pip trade. You see it consolidating. Cool, get out. It breaks the box, get back in. Starts consolidating. This is about 20 pips. Consolidate it again, get back out, breaks the box, get back in, and just ride it. Like scalpers ride it until they.
The problem with what he's explaining right now is he's saying once it starts consolidating, then you get out. But how do you know that it's going to consolidate there? Why didn't he draw a box right here? Because the first red, he would have gotten out here. So it doesn't really make a whole lot of sense. He's looking at this in hindsight. And that's why he's drawing a box there. But when you're actually doing this live, what he's explaining isn't really anything that you can do live. He did say that he doesn't really scalp, which is completely fair. My view on scalping is treat it the exact same way that you would treat any other trade. You just do it faster on a very small time frame. He did say trade the trend. I completely agree with that. Scalping, never counter trend trade. Never. Just basically look for those breakouts, retests, and then follow the trend, something like that.
They see consolidation or any reason for them to get out. Consolidates, it's coming down, would not enter because the overall trend on the 4-hour is still pushing up. This consolidation stops, consolidates again. moving average crosses over, a mix of that, get in again until it stops, starts consolidating, and then you go back and forth with that. You know what I mean? So I'm gonna write out the actual strategy in terms of my strategy versus the scalping strategy. Like I said, you can use both. Like I said, sometimes I will use the scalping strategy, but it's like maybe 3% out of the 97% I like swing and do intraday trades.
Yeah.
But let me just write out the actual strategies. So let me go back to the 2 hour time frame. Actually, let me go to one pair right now. Actually,
But hopefully he explains it a little bit better here, because there's some knowledge that we're still kind of lacking.
go back here. Let's do get a clear chart, USD. Let's just do this. So for my strategy, intraday swing, but more so intraday trading. 1, identify key levels.
Yeah.
2, obviously see where the market is trending. Pay attention to these two first.
Yeah.
Key levels, see what the market is trending.
Totally.
You can trade with it. We don't counter trend trade at all. 3, identify confirmations. Once you figure out the confirmations, it's easy to get in that trade. Then scale down to 5 or 15-minute time frame to enter. And you enter only on a break of structure, which is if you do see a counter trend line, like on a 5-minute time frame, once price breaks the counter trend line or the moving averages cross back up, or you get any type of bullish confirmation on a lower time frame, you enter. And that is my actual strategy. I'll show you guys a scalping strategy, and then that'll be it.
Okay, I'm going to stop it right there. I don't think we need to look at the scalping strategy. I don't think that's really what he focuses on. This strategy is great. I really, really like how he's viewing the market. He did something with the Fibonacci there. I think it's a Fibonacci extension, and I don't actually study Fibonacci extension. I know what it is, and it's basically just so you can get a rough idea of where the next level is going to move to. But you can also just use this in the same sense as if you look at levels in the past, look at untested levels in the past, supply and demand zones in the past, and that's generally going to line up. The only case that it actually really works is when there's blue sky breakouts, when there's actually no levels in the past. That's the only situation where I would actually see use in that. So I never studied it because we very, very rarely see those cases. The other thing that I've noticed is he doesn't seem to explain things in very concrete steps. He seems to be explaining things in kind of based off of the feel, guys. And that's something that I think is just the way he teaches. But essentially, I'm trading the exact same way. So if I were to explain this in my point of view, what I would do is I would draw the key levels, and by key levels specifically I'm saying supply and demand zones and highs and lows. And then we're going to follow the trend like he's saying, only trade the trend, look for that level to be then brought into, and then we either wick below it so that we can see that people are getting stopped out, or we see a nice bounce and we reverse on the lower time frame. And now when I say reverse on the lower time frame, I'm talking about a trend change back into the major trend. The exact same thing that he's talking about. He looks at the 4 hour, back into the same trend that the 4 hour is, and match up with the 15-minute. Hopefully that made sense to you guys there. He, however, is using moving averages and trend lines to define trend. I hate this because those are ways to define trend that are constantly changing. So I use horizontal lines, levels of previous highs and lows. That's how I define trend, because it's much more concrete and it's much more absolute. Not much more absolute, it is absolute, and there's no ambiguity to any of it. And that's where our strategy is basically different, in my opinion. So guys, I really, really like this guy. I was super surprised. And that's great. I'm super surprised. With a name like Swag Academy, I thought this was kind of going to be a joke, but this is probably one of my favorite Forex channels so far. So, I recommend you guys watch this guy. That's great work. And if you guys want to see more of my strategy, I'm explaining it in my live streams in detail. If you guys want to jump into that, live streams are most Mondays to Friday in the morning on the New York session right after I'm done trading for the day. I like to trade the New York Open. That's the only time I trade. So I think it's a very similar type of trading strategy. Maybe I can explain things a little bit differently, a little bit better, and then we can kind of combine our strategies into something powerful for you guys to actually learn and grow from. That being said, guys, that is everything. That is my time. I will talk to you guys next time. Have a great day.
Listen.